All right, let's dive into the latest earnings report from American Homes for Rent. They're one of the country's biggest single-family landlords, so their results for the fourth quarter of 2025, well, they give us a really fascinating peek inside the pressures and strategies that are shaping the whole rental housing market right now.
So right off the bat, the big headline numbers for that fourth quarter. They were a bit of a letdown. The company actually missed what the analysts were expecting on two pretty key metrics. Both their earnings per share and their total revenue came in lower than what everyone was forecasting.
But, and this is a big but, here's where the story gets a lot more interesting. If you just zoom out and look at the entire year, the picture looks a whole lot brighter. The company posted a really healthy 5.4% growth in core funds from operations. That's a super important profitability measure for real estate companies. So that just tells you the quarterly miss, it really doesn't capture the whole story at all.
Okay, so what caused that turbulence, that little bit of a bumpy ride at the end of the year? Let's break down the headwinds the company was up against.
The company's own chief operating officer, Lincoln Palmer, he pretty much hit the nail on the head. He said the supply of housing options for renters, we're talking everything from apartments to homes for sale, is, and I'm quoting here, stubbornly elevated. Basically, what that means is renters just have more choices right now.
And this oversupply created kind of a triple threat for them. First, you've got more competition from other places to live. Second, the really busy leasing season, it just got off to a later start than it normally does. And third, all of that led to softer leasing numbers in January, which put this downward pressure on both rental prices and how many of their homes were actually filled.
So how is a company like this supposed to respond? Well, they have a very specific playbook for navigating these kinds of market conditions, and it plugs right into their long-term strategy. You see, as their CEO, Brian Smith, explains, they made this huge strategic shift years ago. Instead of just going out and buying existing houses on the market, they decided to become a home builder themselves. Think about that. They've added over 14,000 brand new homes to the country's housing stock. And this slide, this just perfectly illustrates what they call their capital recycling engine. It's brilliant. In 2025, they sold off over 1,800 of their older, non-core homes. Properties that just don't really fit their long-term goals. That move generated over $500 million in cash, which they're now plowing directly into building almost 2,000 new homes for 2026. It's simple. Sell old, build new. And it's not just about building. The company's also been actively buying back its own stock. We're talking over $250 million spent on share repurchases. That's a huge signal to investors that they believe their own stock is a great value, and it's a way to return capital to their shareholders.
Now here is where things get really interesting, because all of this business strategy is happening while there's this backdrop of increasing political scrutiny. The White House, policymakers, they are paying super close attention to these large-scale landlords and the impact they're having on housing affordability.
And American Homes for Rent, they're not just sitting back and waiting. They are getting out in front of this conversation. Their CEO's message is crystal clear. He's arguing that his company isn't the problem, but is actually part of the solution to America's housing shortage.
So, they're building their case on three main talking points. First, their development program is adding much-needed new housing supply. Second, when they do sell off properties, they're selling them to individual homeowners, not to other big investors. And third, they claim a lot of their tenants are saving up and eventually move out to buy their very first home.
So when you put it all together, you've got the market headwinds, you've got the build-to-rent strategy, and this political climate. What does the company actually expect for the year ahead? Let's take a look at their official guidance for 2026.
So their guidance for 2026, it kind of points to a year of modest growth. They're forecasting slight bumps in profitability and rent growth, and they expect occupancy to stay high. It's a pretty conservative outlook, and it reflects their expectation for what they call a flatter seasonal curve, which is really just them acknowledging that those high supply levels are going to continue to be a factor.
Which brings us to our final and I think pretty provocative question. American Homes for Rent says that this stubbornly elevated supply is its biggest headwind, right? But its core strategy is to build thousands of new homes. So is their playbook the long-term solution to the housing shortage? Or could it ultimately add to the very supply problem they're trying to navigate? That right there is the central tension to watch.